Nice market pop today. Let's bring in Interactive Brokers Chief Strategist Steve Sosnick, who joins us here at Post 9. Great to see you, Steve. Welcome.
Good to see you, Carl.
We got the delay on the tariffs, but also this Japanese bond issue is kind of helping out, right?
Yeah, absolutely. I mean, I look at it, on a holiday weekend, it's tough to parse this stuff, but we actually were able to parse it a little bit. Yesterday, the ES futures were up sort of 55 points or so, which is a nice rally in itself, 1%. But then we got the extra kick today from the Japanese Treasury their Treasury bond market, basically saying that they're going to try to back off the long end a little bit, and that will help all the pressures that we're seeing at the long end of the curve, because we've been seeing bonds around the world act pretty poorly.
Did you think the carry trade was starting to get nervous?
I think a little bit, because you did see the yen appreciate. We've seen, today even where the dollar is back a little bit versus on a basket of currencies, it's not back to where it was on Friday. So we're definitely seeing there's still this ebb and flow out of the dollar internationally. And so that is a concern. I wouldn't say we're at the acute levels of the carry problem we saw last August, but this is definitely a little lighter.
What signals do you get from retail traders on your platform?
Our customers continue to be net buyers. I see this flow data, at least in our biggest names. But they have backed off. It could be last week because it was lighter volume. There's still, 23 out of the 25 biggest names showed net buying activity. Last week, though, was a little more speculative than usual, because I think there just were a lack of big catalysts. And actually, interestingly, NVIDIA showed very, very slight selling, which is a little unusual for NVIDIA. But that could be ahead of earnings.
Overall, the bullish sentiment, is that a contrarian signal? How do you look at that?
I can't look at it. It was contrarian when the market was falling, because our customers were big buyers as the market was plunging in April. They've kind of backed off a little bit, and I will say that they seem to know what they're doing for the most part. So maybe by backing off now, again, they're still net buyers, but they're not as aggressive net buyers. Last week, though, we saw some weird, sort of very speculative names crop up in different places on the list. Like CoreWeave was like number 6, and things of that nature. Like Oklo pushed back Palantir from, so some of these things was a lot of speculation. To a certain extent, traders are going to trade, and we see that on our platform all the time.
Do you think the summer is going to lighten up volume-wise like it normally does, or is the tape so active and must-watch that people can't leave, or they can't take their eyes off of it?
I think you can't. I mean, think about the news flow that we get, right? I mean, so over the past couple of days, we've been whipsawed yet again. And remember, today is what we call socially acceptable volatility, because we're up 1.5%, but that's volatile. We think of how many months we went without 1% moves, in the prior year or two. Now they're routine. So I think you can't take your eyes off it, and especially with a lot of the action, particularly in the options market, moving to very, very short-dated index options. I think the volume's going to continue as long as we keep getting this news flow that makes it continue.
So is the lesson that you should buy on the tariff sell-offs, like Friday, the tariff threat on Europe sold off, then we got the reprieve over the weekend and we're up sharply?
It seems to be the message. It's almost, like there's a fire being lit, and then we kind of reward it for the fire extinguisher coming out to some extent. But that's sort of the lesson here, is that I think the market is starting to see through a lot of this, because a lot of these threats have been pushed back or ameliorated or in other ways not really as effective as they seem to be. So I think people are reacting. It's still negative that there's this dislocation in terms of what to expect. But I think the lesson that we've learned to some extent is, like it or not, they get pushed back, and we get to do it again. We'll get to do it again.
Well,
in a month
and
or
it's
so.
not clear the impact.
How would you characterize speculative nature of things at this point in terms of measuring? You mentioned Palantir. We focus on it, and CoreWeave, and a number of these names, certainly that are trading at very high multiples at the very least. Is it higher than normal?
I think it is, because I think the momentum trade, David, is so impactful right now. People just chasing performance. And when you think about momentum trading in its extreme, right, all you're watching is, are we moving up? Are we moving down? You're looking at price action. You're not looking at fundamentals. So taken to its extreme, momentum trading is saying, I don't really care about fundamentals. They do catch up over time, but I think that is certainly a characterization now, because we are so momentum driven and because so much money, frankly, has been made from speculation. People are going to do stuff until it doesn't work for them.
Have they chased, I mean, you can't really argue they've chased European stocks year to date like that, have they? I don't know.
They have, although I think our customer base tends to be
more domestic.
Well, our customer base is actually quite international, but our customer base is focused on the U.S. It's a little. It's so we've seen some of the money flowing out, but I would still say our customers, no matter where they are in the globe, tend to like the stuff that we talk about here all the time.
So nobody's positioned for. I mean, we started off the conversation talking about signs of a downturn, which we really haven't seen anything too severe at this point.
I wouldn't say no one's positioned for it, because one thing we look at, first of all, notice today, at least when I came on, VIX was still above 20, which was still sort of a tell that there's still some residual hedging. I like to think of VIX not as a fear gauge, but as sort of a gauge for the demand for institutional hedges. Also in terms of skew, which is how much more people are willing to pay for downside puts than upside calls. They still want their upside calls because they don't want to miss a rally, but we are seeing a decent amount of demand for downside protection. So I think a lot of people are taking to mind the idea of maybe don't fight the tape, but insure against it a little bit. And I think that we see it as part of the process.
That's good. That's good intelligence. Thanks, Steve. Good to see you.